Good morning, everybody. Welcome to the Flow Show. In the midst of a load of Bank of England wafflers going on in a Treasury Select Committee hearing crap thing, you know where you're going to get more of your interest from. It's here, not listening to those clowns. Morning, Kay. You plugged in?
Morning, Ryan. I tried, but I can't. Oh no, it's always, especially when we are a little bit long sterling, it's always a moment of extreme stress having to listen to Bank of England. But
Yeah, not much moves going on at the moment in anything. So yeah, no, everyone's bored and listening to those jokers. So good job you got to listen to us jokers instead. And that's where we will start now with a bit of data out of China. We've had the Caixin manufacturing PMI coming in much soggier, 48.3, moving into contraction after I think it moved into expansion last month, but it's back in the doldrums again at 48.3 there, so not good for China. Over in Japan, it's all about politics today. We've got PM Ishiba considering dissolving parliament if a no confidence motion is submitted by opposition parties. This is often a game they like to play over there, where other parties not happy with Ishiba look to call a no confidence vote. He threatens to dissolve parliament. It's the usual roundabout, but there's obviously a risk that might happen anyway. So we'll keep an eye on that one. Sticking with politics, Dutch PM Wilders has quit his coalition over some policies he wanted to push through on immigration that his coalition parties have pushed back on. So he's basically blown up the Dutch government for now. But again, it's all horse playing and whatever. So we'll see what comes of that. Back to Japan, we've had a rather unhawkish Ueda out on the overnight and this morning. He started off with his same old script. The economy is modestly recovering, but despite some weaknesses. Says there's no preset plan for rate hikes. Will only act if the outlook materialises. Says corporate profits are improving and business sentiment is solid, but overseas slowdown is pressuring profits and growth is expected to decelerate. Says inflation is still below target and cost push pressures are still expected to ease. Says Japan's core inflation remains below the BOJ's 2% target. Real wages remain negative, and that's damping consumption. And that real interest rates remain deeply negative. And then he's pretty much put the nail in the coffin for a potential June move by saying he sees no change to the big picture of Japan's economy or price developments since we released our outlook report on May the 1st. Quite a few torpedoes there for a June hike there, Kane.
yeah, yep. The interesting one in though is the other line that we were wondering when they would revise QT, and he kind of came up with a line saying that it may be over the next monetary policy meeting. Maybe he didn't really confirm in so much words, but he said they may revise a bit. So now market is expecting them to well, hoping, expecting, thinking, looking at the possibility of them changing a bit to their QT. But yeah, as you say, Ryan, he probably killed June. Yeah.
Yeah. Now, it's when we're talking about this QT stuff. Are we wrong to think that it's going to be the change of a pace to QT, or just a change of the makeup that they do under QEI? You know, do less in the super long end, as everyone's calling
Mm.
it, and just change the composition of what they do for QT.
Well, the long end and the super long end have always been much smaller anyway than the belly and the short end. It's a good question. They could do a bit of a twist, or yeah, just lower the pace of the runoffs a little. They have various ways now. They could just also come out and say like, okay, I mean, we are going to keep the pace, but we are ready to intervene in the bond market anytime. That is possible as well. And the thing is, they could change the wording of that sentence to make it appear that they are much more ready to do so, and that is also a possibility that is not negligible in my opinion.
Yeah. So yeah, it looks like a hike is off the table,
Yeah,
but some tinkering with QT and the bond market might be possible.
it's
So
it's
yeah, look out for
it's a
that.
bit strange because you were and rightfully saying on the in our chat room for people who are not in our community, we are talking the whole day about everything that's going on in markets, and there's not just the shows. I mean, we really talk a lot, and all our friends who are in the community are joining into that party. But you were saying that it's a bit strange that he managed to hike a few times, being so cautious. The thing is, he's been so cautious to get everybody ready for the whole thing, and then we see the government only reacted like about a couple of weeks ago to the bond moves. It seems that they didn't get the message early enough, and so I think the UEDA is okay. They could have actually hiked a lot faster, but they can't because the government is so slow in reacting, which is a typical Japanese thing, has to be said.
Yeah, yeah, absolutely. Behind the curve, so they can be so far behind that they can't even see them in the distance. But as you say, that's the Japanese thing. Right, hopping across the water to Australia, we had the RBA minutes. Not much in there that we didn't already know. There was one line I've picked out. It said that there's no shift yet towards expansionary policy. And that's being reserved for a trade shock scenario. So that's the difference between cutting rates because they've been so high, getting them to a neutral level, or taking them to a level where it acts to expand the economy. There's some subtle differences in how central banks look at rates. So that's a comment to say that there's no shift towards expansionary, meaning they're not likely to be cutting very fast from this point onwards, or taking rates as quite as low as some might want or expect later on. Bit more data out. Swiss CPI, no help for the SMB. Inflation has gone negative, at least in the headline number, now down 0.1% as expected and as touted by his nibs at the SMB. The EU harmonised number coming in also at minus 0.2%. Core inflation, though, still positive, 0.5%, but down from the 0.6% previously. The S&P nailed on for a hike. They've been talking about wearing some negative inflation for a while. Keep pumping that negative
That's right.
rates are in the pipeline and everything else. Will they be getting a bit scared, though, that they might have to go negative again, Kay?
Well, um, uh, oh, you know what? If they look at the level of the Swiss franc is refusing to come down, right? It is simply refusing to weaken, and I mean not weaken from 93.20 up to 93.70. I mean weaken, okay? Going like their inflation is virtually flat. S&B rates are at 0.25%. They are not happy when the Swiss franc is strengthening. They would have. I think they said as much, right? Schlegel said that they don't want, or they would not want to take the rates into negative territory, but will do so if they have to. Well, look at the Swiss franc, look at where the inflation is, look at everything. It's very much in the possibilities, I reckon. I must admit, I have not listened too much to the Swiss corporates of late, but we know that the last round of Swiss being too strong, etc., they were not happy about it. I don't know where they stand right now, but we just have to see that Swiss is refusing to weaken simply not even 1% or 1.5%, to say, okay, now we can start to look at it again. So I think that ups the possibility of them going negative. Yeah.
Yeah, exactly. It's they've got it in the toolbox, but it's not necessarily a tool they will want to pull out and use. That's for sure. Right, onto the Eurozone inflation numbers there as well, slightly softer than expected. Headline CPI coming in at 1.9% versus a 2% expected and 2.2% prior. Core coming in at 2.3%. Again, a pip lower than expected and 4 down on last month. So that's if there was any people not expecting the ECB to cut this week, that's probably done for it for those expectations anyway. So that's what we're looking forward to on Thursday, a cut, and then whether that's going to be a cut and a pause or whether they're going to keep going. Apart from the BOE wafflers this morning, which I haven't been bothered to note down because they've not really said anything too much. They have been on the more dovish side of the street in terms of what they've been doing. They're explaining away what they did at the last meeting. But we did have BOE's man out overnight saying that we must consider interactions of QT and rate decisions. Says QT tightening cannot perfectly offset rate cuts. Says monetary policy is immediately changing UK consumer behaviour. And then this was a bit of a move or a bit of a comment saying 25 pip moves get swamped by volatility, so we need to be bold. That's basically saying that 25s may not cut it. They may have to step up to 50s. But that's not saying in terms of cuts or hikes, but just in general, how 25 pips don't get you the bang for the buck they used to. Yesterday's data over in the US, we had the final numbers from the S&P manufacturing PMI in the US. If I can find it, there we go. We're in there. That came in softer at 52, though it was still positive for the month of May. Canada just above that, also seeing a little bit of an improvement, but still in negative territory. Then we've got the ISM, which came in softer at 48.5, although it was a little bit mixed because new orders actually rose 47.6, but still negative. Employment ticked up a few pips, still in contraction though. And prices had a little bit of a pullback, were expected to rise, but came in negative for that. But not really good news in the comments either. Tariffs still playing a part in everything. Although reading through all the comments and whatnot yesterday, we're still in a situation where a lot of firms are in wait and see mode. So they're not yet reacting negatively to the ongoing uncertainty. They're not looking to vastly cut costs, cut staff, i.e. fire people, and trim down operations. But that's a bit of a seesaw, finely balanced seesaw, and it could tip either way depending on the outcome for all this trade stuff going on. Over to the Bank of Canada, and it looks like all those economists who were looking for a 25 pip cut are erasing all those expectations now, because according to a Reuters poll, 20 of 26 economists now say they are going to stay on hold, with the other 6 saying that they're still going to cut. So it looks like everyone's going to be looking for them to stay on hold tomorrow. Fed Logan says a key risk is if higher short-term inflation expectations become entrenched. Fed's Goolsbeast says we've had an excellent inflation report so far. Surprising little direct impact of tariffs. Says he doesn't know if this will stay true in the next 1 to 2 months. He's a little gun shy about arguing tariffs will have a transitory effect on inflation. It says recent PCE inflation print may have been the last vestige of pre-tariff impact. We've got a lot of trade stuff going on. UK Trade Minister is apparently off to meet Trade Representative Greer today to talk about a tariff deal. EU Trade Bod Sefcovic is going to meet Greer tomorrow to talk about that stuff. Scheinbaum is waiting on US steel tariff publication coming tomorrow. Mr. Trump, however, has told everyone that he wants country's best offer by Wednesday in tariff talks. That's according to Reuters draft that they've seen. So he's put a bit of a deadline that he wants all these trade deals to be presented. We've still got this stuff going on with China as well. A White House official several times has said that Trump and Xi is likely to speak this week, although they still come up against a brick wall in China, it seems, because from the Chinese side, they say there's no information to share on any Trump-Xi call. So it seems, I'm getting the feeling that Mr. Xi is trying to pull down Mr. Trump's trousers over all this. And maybe Trump and co are pushing these calls to try and goad them into picking up the phone. But it seems China's having none of it at the moment. What Trump has done, apparently, according to Bloomberg, is extended the tariff pause on some Chinese goods to August, well, the end of August, the 31st. So maybe if there's been some talks under the hood that we don't know about, they've come to some agreements on that, or it's Mr. Trump offering another little olive branch, but we're still in this situation. So we got a bit of a influx moment coming. All this trade stuff happening today, tomorrow, deadlines by Trump and whatnot, and steel tariffs and everything. So, Kay, we should be expecting a load of headlines to be washing through our screens.
Another overload, another headline overload, Ryan. Yeah, we're not going to be seeing any slowdown of those soon. But in the meantime, it's still oh well, the new apparently Chinese trade negotiator, and then Xi are very stubborn. They see the US and are dying for them to pick up the phone, and Xi's really playing hardball, and I think the markets would have a bigger reaction if G picks up that phone effectively and start to talk. Then all the headlines that Trump is now sending on onto the wires. Yeah, and in the meantime, it's up and down. But then EU, China, we have one positive line now, then a bit of a lesser one next, and then again that they are working together on stuff, but things are not going as planned either, and so it's all still very much up in the air, right?
Yeah, I mean, I don't know if we're going to get anything positive from this. I mean, look, we had all these trade deals in Trump 1.0. Everyone remembers the soybean saga and everything with that. And everything they did, they never abided by anyway. Never adhered to any of the deals. So maybe this time they're just going to stick two fingers up at the US and say, okay, do what you like. We're not playing ball. And if we get that sort of confirmation, I don't think it's going to be good for risk. But
No,
we just have
and
to see who it's going to be worse for, China or the US.
yeah, well, and let's not forget they have the other side where they are very active, Russia and another and other areas.
Yeah, and
Yeah,
big
let's
holders
say,
of
I mean,
US
it's
debt.
not positive. Huh?
And big holders of US debt.
Absolutely as well, right?
Yeah, so
That's why I don't understand why the US is not working a lot faster on a deal with Japan. They need Japan. They need Australia, for instance, as a buffer to and a stronghold in the zone. That's why I don't get Trump and his administration or Bessent going to Trump and say like, okay, let's do that Japanese deal because we need those guys.
yeah, exactly. It is very strange. It is very strange. Right, well, that's that on the headline front. Unless you got anything more, Mr. K?
Thank you. Nope.
Good, good. That's what I like to hear. We've got a bit of data out today. It's Tuesday. God, it feels like Thursday already. So we've got factory orders coming out, which will have the durable goods revision. This data is, of course, subject to some big swings and whatnot, particularly in those durables after what we saw last month. But factory orders looking like they're going to undo all last month's gains with a loss of 3.1%. We got jolts coming out as well, which is going to show again the potential for hiring slowing, not necessarily firing, because this is job openings, vacancies, and if hiring slowing, then these will naturally come down. So we're expecting a drop to 7.11 million. I think there's good chance, possibility that it could come in lower than that. The surprise will if it comes in much higher, even higher than last month. But given the mood we've seen from firms and the comments we've seen from firms, this should be on a trajectory, on a lower trajectory anyway. And I think we're still in a bit of a mood where any bad data is bad for the dollar, rather than good data is going to be pretty good for the dollar. So take the mood of the buck as we roll into that number there. Right, let's get stuck into what's going on the price front. On the dollar Swiss, I might as well stay there. We've had a bit of a breakdown under this level here, 82s, 81.90s. This was a level that I managed to trade off of when we hit it last time. Decent support area, got a good run up in that one. I was eyeing this potentially for another go, but I'm glad I sat my hands because we've broken below and we're now holding below, although we have attempted to try and get above that line, but we're not. So we found a bit of support around 81.50s, a bit of a minor area, bigger areas down towards 81.20s and these prior lows and prior price action. So below this level, there's every chance that we might head towards those lows, which I might consider having a go. But again, it depends on the mood of the market at the time. If we do go down there, it could be that we're going to continue this downtrend since May, and then we're potentially going to be targeting or heading through those lows. So that's one I'm just keeping an eye on. Dollar yen, we found a bit of a bottom for now, down around the 142.30s. Let's just zoom it in a little bit because we're not doing an awful lot. We did have, this was the pretty much the Ueda bounce overnight and his comments. We ran up to this 143.20s area. Didn't do much on the way down, but come back, and now it's doing something on the way back up. We can't really break through and hold that. And we've had a little bit of a sell-off. Ueda come out again this morning, gave it another little lift, but we're just pinging and ponging below this 143 at the moment. So no real signs yet that we might be bouncing anywhere. I would just keep an eye on this lows down here, this 50s area. We've had half an attempt down there at 60s. That might be it, but if we have another test down there, that might be my little old 1, 2, 3 pattern, and then that'll give it a bit of a basis to maybe go on a bit of a run higher, if it doesn't do that anyway. But as I say, watch out for the data later on. Bad news is bad news for the dollar, but if that news can't break any of these prior to lows, then that would indicate that perhaps we've found a bit of a bottom. It's going to need something more to give it a shove down to that 142, which I'm still interested in as maybe getting out my shorts or even taking a small long there. Again, depending on the reason for that one. You got any thoughts on this one at the moment, mate?
Yeah, it's one of the currencies who is doing pretty well, and that is yesterday. Market was thinking about risk of supporting the yen, but we've seen that after that Ueda blip, perhaps it's still offered. This thing, I think the market is trading as if a deal is going to be done relatively soon. Which I think they should. But yeah, and so we are finding resistance, whatever happens in the rest of the dollars. And it has to be said, the rest of the dollars are better bit than they were yesterday. It started overnight, and the dollar is seemingly doing a little better. So there is a potential, I would say, for a move back up to 143, 144. Well, yeah, 143, where is that? 143 and a quarter, and then, yeah, the 144, but then we will have to see what happens there. If the dollar continues to do better than yesterday.
Yeah, very much so, mate. And I'll leave you to look at euro, dollar, and
Yeah.
cable. I'm going to have a quick look at sterling because I think I've messed this one up. I was waiting to see if what would happen at his 30s level, and I left it from my short. I'm short at 18, not the best trade in the world, but it found support at the 30s, and then it's moved up, and I didn't get out, so I'm in a little bit of for a little bit of hope mode, shall we see? But I might have just a final nibble against this 60 level. That'll be my line in the sand, and then I'll take my medicine if that breaks and goes higher. If it does, we're probably on for a move to the big old zone up here, 84.80 up to 85. This is the big old historical level up here that goes back donkey's years. So it's a big old traffic area. Lots of action we had all the way through latter part of April and May, as you can see, and much beyond as well. So no help from the BOE wafflers anyway at the moment. So yeah, it looks like I'm going to be eating this one, and that'll give me a slap and remind me to stick to my rules from now on. But we're all straight from the path now and again. The other one been banging on about is this old dollar MEX. I don't know why we've got support down here at 18. This is where the market wants to stop, and we've stopped there several times now. So maybe it's something, maybe it's not. What's causing me to think it's not is that we are just bouncing back to this 24, 25 level and finding resistance into it. So really, if you're trading this one, just take your cues as to whichever side we break from here. I didn't show it, but I highlighted some levels in our chat room earlier this morning, just on some of the wider charts. We got the 200 weekly moving average coming in just ahead of that 19 level. Then obviously we've got the fib down here, 1877. The big level is this 1850. This was a big old break point, big old resistance point, support point, all the way through. A lot of history behind this one that goes back a bit as well. So just keep an eye on 1850, but we've got to get there yet. On the monthly, there's a couple of interesting developments. Doing a lot of zooming around here. Come on, get it together. We've got this 100 moving average, which we actually closed the month below it, and then we've obviously opened the new month below it. So that's going to be a bit of an important level. That's call it 1950. If we're staying below there, negative candle below there for this month, that's going to potentially mark a real solid top. And we're also deciding what we're going to do around the 55 monthly moving average. That's 1929. 30-ish, which is around a level that we've been watching an awful lot lately. So again, if look at that, if we're holding below it, that 1929.30 could become a significant level as the month progresses. But just coming back for this one, Kay, it's a bit of a knife edge at the moment as to which way it goes from here, whether we do get that move down to 19 or whether it's going to base here a bit and maybe push up again.
Well, I have a zone of support down to pretty close to your weekly there.
Yeah.
I have a zone of support. The interesting thing for me, which keeps me short, is that we bounced and we capped in the 40s ahead of the bit of the resistance area there, and that's just I think, yeah, I mean that's good enough for me. We don't need to go too tight on it. It's an emerging market currency for one. Sorry. If you look at a big figure, is only 0.05% of a move. So we need 20 big figures to move 1%. Yeah, I'm still positively eyeing the mix for my. Well, I've been trading ads around pretty nicely. Managed to sell again on the last fixing of the month around 1942, and I've been gradually scaling that back. And then my core is still there. And I think, Ryan, if we start to break back above 1950s, call it 50, 55. I'll probably call it a day. But for as long as we are under there, don't change the winning team, in the knowledge that there is some decent support from here down to that 1905. If in turn it breaks 1905, I think 1850 is going to stare us right into the face.
Yeah, absolutely. Yeah, I'm just looking at these levels 19, 10, 11, and you've got oh 07, I think, which is
Exactly,
round about those little lows. Not
exactly.
massive, but levels that were bottoms for a reason back then.
Mhm.
So you got to respect them.
Yeah, and you've got like enough levels down there to create a bit of a zone, right?
Yeah,
And
yeah,
and then I have it as a box on my chart. So I mean, this is if that box gives way, I think we accelerate again. But in the meantime, if you look at pure the carry factor of things, we're still getting paid to be short dollar mix. So even if our stops are going to get done, we will have taken carry in the meantime. So everything is less expensive.
yeah, very much so. Well, if the buggers stop cutting their rates, that is.
Oh yeah. Mm.
Yeah, we're not quite getting the 11% odd that we were before.
Nah, not anymore. Not
8%.
anymore. 10% in the mix and zero in the end. That was the carry trade of the century then.
Yeah, exactly. But all things change, as we know. Right, Matt, I'm going to flick it over to you for a few. There we go.
Thank you. Yeah, the euro dollar. We went through that 114 and a quarter relatively easily, but we failed to get up to really 60s, where I thought would be the next level, and then having a look at 115. It's not over yet. The party is by no means over. This is just a correction from 112, which could bring us to 113.80 or so, or even back down to 113.20 and then ramp higher. But um, today's inflation data, also the dollar globally, and I will show with some other currencies as well, the dollar globally doing better and crawling some of its weakness, yesterday's weakness back. Remember what I told you, that first of the month, people sometimes just take back their positions or have fresh money coming in and needing to do something, and that's the move that we got. And now this initial move is done. Now we will have to see what's really going to happen. And I would first zone, I would say, like, pay attention if we get back down to 113.80. And then the next one, of course, if we take now the 114 and a half, 114.60, we're pretty quickly going to be up around 115, where it's decision time. But for the time being, it's a calm down. And let's see what the US wants to do with their own dollar this afternoon. Cable did exactly the same thing. We ran up to the 78.6, tried a number of times yesterday to break, couldn't, and we're back down here. There is a bit of, but that's the short term. Short term, I may actually put it rather here. A bit of support. You've got a little one around 135 the figure, then we got a bit more around 134.85. Again, allow for those kind of things to happen. I would start to worry though if we break back below 134.20, 134.15. I guess that's our new 133 for now. So that moved up around the big figure. I would start to worry if we get down there. Okay, but for the time being, just a setback. Let's see. Perhaps 135 is already holding this afternoon. Let's see what the US wants to do with their own currency. But we need to get back above that 78.6 to go and have a test at a prior 136, which is then the gateway for that zone up into the 137s. But let's see what they do, because today the dollar is much less offered than it was yesterday, and a couple of currencies that really showed what illustrated what I'm saying right now is that look at that Kiwi, and first of all I'm going to go on the daily, because we double top, we broke it. We broke also the 61.8 around 37. I told you 30.40 imported. And then we went up to this 60.5, even in early Asia, and then all of a sudden, party over and rejection. And I guess this pretty sharp and swift 60 pips moves is a reflection of just people being too late to the party. Perhaps a few of the longs saying like, okay, I mean, time to take some profits, and those late to the party have been forced out of their positions. Myself, well, I was long. Okay, I was long from around here, and took some off. Then I did add a little bit through the level to test the break, but I rather quickly let that go back through 60 and a quarter. I didn't want to hold it too long, so no harm done there. And I'm trying it again in front of that 59.90. That's our first support of the day. But similarly to other currency pairs, we have had the dollar doing a lot less bad than it was looking yesterday. Okay, so we need to be a bit careful. Overall view hasn't changed, but be a bit careful because the as I said, second day you never know. Huh? If we get a little bit of a deeper reversal, so I'm keeping everything I do relatively small right now. Bigger level on the Kiwi would be, well, we have a 59.67 in between, but a 59.30, as you see here, 25.30, that's the bigger support. But again, it's going to take a renewed move through that 60.30.40 to continue to go, which would then lead us relatively quickly into the 61s. But I'd say respect what happened here, okay? And obviously finding similar in the Aussie, 65 tried, 65 tried, 65 here we are, tried it again, just ran shy, and we had a 50 pip decline here because and there was some hint. Uh, they spoke both ends of the story, but keeping that 50 BPs, so they said they talked about everything between 0 and 50, but decided to do the 25, cautious, not doing the 50. So the 0 was the hold was out of the question, and the market got perhaps a little spooked on that thing. We also had. I don't know if you mentioned Ryan. I'm not sure. Forgive me if you did already. The current account, which is still deeply negative, so that is also a break on the Aussie dollar. I say allow for some moves down, perhaps back in, see what happens if we test the 64.40. Also keep a close eye on what's happening if we get there 60.10.20. But we are still holding above, even though this is a channel, and if we break under the channel, people will put in stop losses. But then just keep a very close eye on those two levels here if we would get down there. 63.90, because it held quite solidly to then finally get up to 65, and then here 63.5. If that would go, then I think perhaps we are going to see a move, quite a deeper move. But for as long as those levels hold, even if that channel would break, I'd say pay attention to those levels. Dollar CAD. Well, yesterday I tried the where is it? Yesterday I tried the break of this one here. I thought it was breaking 137, but really shyly. So I thought I sold a little around 137.10. We are still in resistance territory, okay? We are still in resistance territory. I would say up to 138.15, but can't deny that one break, two breaks, and it's not really pushing lower. So I'm going to relatively quickly decide to do with my small short and perhaps look at a level closer to 137 three quarters or even 138 to try it again, perhaps, because I find all in all the cat doing relatively okay in the global scheme of things. And but we have to respect all of this, right? We are back above 137. We're back above 137.10. We're just hovering around this 137.30. If it goes above here, up in those 50s, perhaps there's going to be a bit of a runner. I'd be cautious. Get a third attempt though, through 137, 136, 90. Some people are looking at 136.70. Then we could push down lower, down to 134s. But it's a bit in the balance right here and now. That is what I think. So it's all roughly the same, because we saw the same thing on gold as well. And we tried to break above that resistance zone, just putting a bit of a fresh high here since early May. But we didn't reach 34, didn't reach there, and then we gave it back. So again, it's about the same as all the dollars are doing right here and now. So as we were saying yesterday, dollar got sold. Today, we see a bit of a revival of the dollar. It is a dollar move. So let's see what's happening this afternoon when the US comes in, and see what they want to do with their own currency. It's a bit funny that the dollar is trading opposite side than the equity markets right now. So I mean, usually when equities ramp higher, no need for protection. Also, dollar finding a bit of weakness. Now it's the opposite. When the stocks rally, it's a case of confidence rather than anything else. So interesting. If we start to break back higher, we're probably going to go up to those prior highs here. But in the meantime, I'd say allow for a move back down to 33.30, maybe even 33.15 without changing much to the picture, but just allow for it because we are in a bit of a different scenario for the dollar today. Silver did relatively the same, ran very close to the 34.85. I did let some of mine go, but earlier around this zone here, around 34.5, and I'm back in sit back and wait attitude. I know that Still sold a fair bit of his out as well, so well done. But this is really going to be the gateway. I told you as well about the 35.10 right above there, 35.12, right above there, the 35.10.12. So this is the important zone here on silver, and for as long as it doesn't break, respect the level, okay? So that is relatively it for me for today. And I give it back to you, Ryan, just with the just want to again repeat that to the people to respect those levels, because we have seen this prior months as well. First day of the month, we make this kind of move, and then the second day we see a bit of a retracement of everything, and we are back again in the same scenario. So it's not a sell dollars and close your eyes market. We still need to be a bit cautious in my opinion.
Yeah, good advice indeed, mate. We have seen it often enough. You get a move and then it runs out of puff, and then you either need to get something else to give it another shove, or you find things go the other way a little bit till the next headline anyway. So, yeah, good advice as always, mate. Thank you very much. Have a great day, everybody. You'll catch us all a bit later on Face as well. Otherwise, we will see you bright and breezy tomorrow. Have a good day, everyone.